Hi, everyone. Thank you guys so much for joining. Most of you guys know me. I'm Bracy McCool. I'm the benefits administrator at TOSO. Thank you so much for joining. I see a lot of familiar faces, so I appreciate you guys showing. And those of you that are remote, thank you so much for joining. Today, we're going to be talking about health savings accounts or HSAs. Today, we have Derek Stover, who's a private client banker at KeyBank. He'll be going over a presentation for us. I do have a couple pieces of information I just want to touch on quick. Open enrollment is going to open this week, starting on the 19th through the 29th. Where we will have an on-site fair next week, and we'll also be going to King of Prussia. For those of you that are located in King of Prussia, we will be there on Thursday, the 18th. And we'll also be doing an in-person and virtual session on April 22nd. So there's a lot of opportunity to learn a bit more about open enrollment at those times. And we will be sending out communications about open enrollments, all the benefits and all of that in the next day or so. So just keep an eye out for that. And we'll be around for any questions that you may have. That being said, I will pass it over to Derek.
My name's Derek Stover. I'm the private client banker over at the Springtown Road location. So it's kind of a hybrid position. Do about 50% on the bank side and 50% on investments. So I'm licensed for investments as well. So if anyone has any questions after here, want to chat, we can get something set up or have a conversation. But diving right into it, today's conversation is really just going to be all about health savings accounts. So important part is just really starting that journey, understanding where you are today. Meeting you where you are is what we like to say when you come into the branch. Starting our conversation is always meeting you where you are rather than anything else. Next step is always taking action, just one step at a time. There's lots of different components to everyone's finances. So just one single action at a time. We also want to build the healthy financial habits. I always equate this kind of like to going to the gym. You go to the gym and you work out. 2 days later, you're always super sore, right? Yeah, always. But the more you do it, the more you routinely do it, you get less sore. So it's really no different with your finances. If you build those habits now, it's going to suck in the beginning, but as you continually do it, it's going to get so much better. And be great for you. We also want to monitor regularly. So that really just keeping an eye on things, keeping an eye on your progress, making sure it's tracking to where you guys want to be, making sure we're finding that balance between the meaningful and the doable at the same time. It was super meaningful to put $1 million into an investment, not always super doable. Whereas vice versa, $1 into an investment isn't super meaningful, but it's pretty doable. So it's finding that balance, taking steps toward it, and just making sure we're on track for that. I always like to throw in with monitoring regularly, just fraud. Unfortunately, fraud happens in everyday life. People get their accounts hacked, and good to keep an eye on everything just to make sure it doesn't do any damage to what you've already built. And then celebrate those successes. Whether it's something super small or something huge, just always give yourself a little pat on the back as you go along. It's easy to forget to do that. So I have a couple questions. The first one being, what percentage of Americans cannot cover $1,000 unexpected emergency expense with the money they have in their savings account?
90%.
What is it?
90%.
90? Okay. The answer will be on the next slide. Anyone else have any guesses? 75? Okay.
You ready?
80?
No, there's no one on mine.
Okay, perfect. And we'll get to that answer here in just a second. Second counterpart question to that is, what percentage of bankruptcies are caused with medical expenses being the key contributor? So the main reason for bankruptcy. 75? 60? Okay. Okay. If you want to go to the next slide. So do these numbers shock anyone?
Like I thought.
Yeah. And the 56, so it's not necessarily just medical expenses. It's any emergency expense. Something blows up in the car, or tree falls in the house or whatever the case may be, and including medical as well. 56% of people are not equipped to be able to sustain $1,000 unplanned expense.
That's over half the country.
Yeah. Yeah, and then who was surprised by that second one there with bankruptcies? Oh, God. We were right around that number. Yeah, these two examples right here are prime reasons why we should consider doing a health savings account and how it'll help prevent a lot of this. Okay, you're good. So what is a health savings account? Just the definition of one is an HSA is a tax advantage savings account designed to help you pay for qualified medical expenses. You control this account and the funds roll over from year to year, so you won't lose them if you don't use them. So there's lots of different types of HSAs. The one specifically with banks, held with banks, they are individually owned. So you as a person have complete control over that account. If you don't use the money in that year, it doesn't just go away. I know there are some HSAs out there that do that. Ours do not. So you own it even, and we'll get to it in a little bit, but even if you move to a new workplace, that goes with you. So you don't lose it. It must be individually owned. Spouses can be added as authorized users on it and can get a debit card as well. So even though it's your individual HSA, whoever you add as an authorized user on it can still use it for qualified medical expenses as well. So question 3, who can give me an advantage to having an HSA?
Like savings.
Anyone else?
For those unexpected expenses.
Yeah, for sure.
Basically, it's a account.
Yeah.
You can use the money in there later to pay for, what, Medicare part, the extra.
You can. So yeah, we'll get to that. Yeah, you can. What was that?
But we're good, sir.
That's true. Yeah, absolutely. And we'll get to some of the, I hate to say fun, but some of the fun ways you can use it later. Perfect. We're good. So these are some of the main reasons and main advantages of having an HSA. They are controllable. You're able to make deposits into your HSA up to the IRS limit and manage how you want to invest your funds. So we'll get to that, what the limits are here shortly. Anything past $10,000, once you have 10,000 in the account, you are able to invest. So they come with interest. You'll see that fourth advantage there is interest. Inherently, they have it built in, but the interest you gain on these are nothing to write home about. So once you get 10,000 in the account, I would come see me and we can have a conversation on what we can do with it. They're flexible. You can use the funds as you need them and save them for any future medical expenses, like you said, making sure that we have that money for that $1,000 unexpected medical expense that comes up. They're portable. You own this account, so if your workplace changes, you can take your HSA with you. And then again, earning interest, but again, the interest rates on them aren't phenomenal, very comparable, like checking accounts, pretty minimal. But something is better than nothing, I suppose. And all the interest earned on these are not taxable. So you don't have to pay income tax on any interest you earn inside of an HSA, which is nice.
Ever?
No.
Assuming it's spent on health expenses.
Correct. Yeah. Well, the gain inside of it, you don't have to pay interest on. The only time you would pay taxes on this money is if you use it for a non-qualified medical expense.
What's the rate that you earn? What's the interest?
I believe the interest rate's like 0.1, 0.2. It's really nothing. But once that 10,000 is saved inside of it, that's when we'd have a conversation to say, okay, what can we do with this to earn us more of an interest rate? It's less about the interest we're earning and more about, we just want to have a bucket of money set aside. So if something does come up, we have a bucket we can dip into to use for when those unexpected medical expenses come up. Yeah. Okay. So this is who is eligible for an HSA. So to be eligible, you have to be covered by an HSA qualified high deductible health plan. Typically, that's whatever health plan has the lowest monthly that you guys pay for. Now, it might sound counterintuitive to pay less now and more if something happens. But that's the whole idea of this HSA, is to have that money built up for when something happens. So it lightens the load now. We're paying less monthly for the plan itself. And when something comes up, we have this secondary bucket of money that we can pull from and it's needed. May not be covered by any other health insurance plan. Common exceptions are dental and vision. You can still be covered with a dental plan and vision plan as well. As an account owner, you as an account owner may not be covered by Medicare. So once you're 65 and you get Medicare, that's fine. This doesn't go away. You still have the account. You just can no longer contribute. Because once you have Medicare, you no longer have your high deductible plan. So you're essentially no longer qualified for it. But that does not mean your money goes away. And this is kind of a one-off, but if you're claimed as a dependent on someone else's tax return, you're not eligible for it. You have to be on your own. Yeah. So again, kind of a one-off there, but it does happen. So who is eligible? You may pay for qualified expenses for yourself, your spouse, and your dependents, even if they're not covered by your medical plan here. So if your medical plan is only in your name, you can still use your HSA for really anyone. And then again, you can add authorized users to your HSA so they can access the account. At the bank, we call that more a debit card use only. So they're not technically on the account, they're added as users, so they are able to get debit cards. Okay, now the fun part, how to fund your HSA. Since your HSA has tax benefits, there are limits to how much you can deposit. Contributions can be made until tax filing deadline. So until you actually file your taxes, you're allowed to do prior year and current year contributions. Once you file, I imagine everyone probably filed yesterday. Once that's done, you can only do current year, unless you have extensions. Right. It's kind of relevant for 2023, but there are the contribution limits. There, 2023 was $38.50 for individuals, $77.50 for families, and then that was changed in 2024. You'll notice it changes almost biannually, or not biannually. It changes every 2 years. Really just with cost of living, inflation, as it rises, things get more expensive, you're able to contribute more into it for tax advantages. Current limit is $4,150 for individuals and $8,300 for families. If you're older than 55, you're able to do what's called a catch-up. Very similar to IRA rules. You're able to add that extra $1,000 into it per year. So if you're 55, individuals is $5,150 and $9,300 for families if you're over 55. It's super important. This is a very important part. This line down here at the bottom, ensure you are monitoring contributions to your HSA account and are within established limits. If you exceed the maximum contribution limit, IRS will impose a 6% tax penalty on any excess amount. So if you put an extra $1,000 in, that $1,000 will be charged with a 6% penalty.
Is it charging 6% on top of being counted as income?
Yes.
Okay.
Yeah, so it's very similar to if you take out of an IRA before you're 59.5, it's taxed as income, and it's also taxed
Additional 6%.
as a penalty. Yes. Perfect. Okay, so question here.
Sorry,
At what
sorry,
age can you make
does not-
non-qualified withdrawals from an HSA and not be charged the 20% IRS penalty? Any guesses? At what age? 70. Okay. What is it?
67.
67. Okay. Anything online? Okay. So that is actually 65. The reason for that is, again, with Medicare, once you qualify for Medicare at 65, you can no longer contribute. But the nice thing is it's kind of a give and take. You can't contribute, but now you're not taxed penalty for non-qualified. You can really use it for anything at age 65. Yeah. The 20% and the 6% are two very different things. Does everyone understand that? So the 6% is a penalty on excess of what you contributed. The 20% is if you use it for non-qualified expenses.
Someone had a question online. They
Yes.
said those limits for the HSA contributions are per year, right?
Correct. Yes, per year.
For tax year.
Yes.
Good.
Yep, we're good. So how to use your HSA? Yes.
On this contribution.
Huh?
Because with our HSA, the company puts some money in and then we put more in. Is it a combination of those two amounts?
No. So you're able to put in that amount yourself. The employer contributions does not count. Yeah. Any other questions or anything? Cool. So here are some of the qualified medical expenses, just some of the very common ones you'll see. You also see on the other box, it has ineligible expenses there. But I wrote down some of the surprising ones. So I Googled the 10 most surprising HSA eligible expenses. So just for, if any of these come up, batteries for medical devices, you can use this for. Fertility trackers is something. Sunscreen for those beach vacations we have planned for the next couple months. Feminine hygiene products. I thought this one was really cool. Lead-based paint removal. So if you have an older house and it has lead paint in it, you can actually use your HSA money to have it removed. Fortunately, you can't use it for the new paint.
It says qualified expense not covered by most insurance insulin treatments. Isn't that just medicine?
What is it?
It says insulin treatments are qualified expenses and not covered by most insurance.
It just depends. I mean, this
Like,
is kind of
is insulin treatment like insulin for diabetic people? Is that what that is?
yes. Insulin treatments, yes. Yeah. But those are covered under HSA. So this is kind of a blanket of all the different kinds of high deductible plans there are.
Just
So it doesn't necessarily go right with it.
Covered by insurance.
Yeah, you'll have that. Another interesting one is wigs. And then the last one I thought was nice is,
Blood cancer.
yeah, home improvement for medical reasons. So if we have older parents or anyone at our house, we need to make upgrades to our home, like a ramp or whatever the case may be, you're able to use HSA money for that.
I'll hop in here real quick. I just want to touch on the TOSO specific information. For this upcoming plan year, TOSO is going to be increasing the amount of contributions that we make towards your HSA. So those amounts are listed there depending on which tier you're enrolled in. And just keep in mind, you do have to open the HSA account and provide us that account information to receive these contributions. So if you're already enrolled and haven't done so, please do. If you elect the high deductible health plan for during open enrollment, just make sure to open that HSA account. And you can do so with KeyBank. They're our preferred institute. We waive all the fees when you enroll with them. Or if you have a personal bank you'd like to do that, we just need the routing and account number in order to get that set up for you. We will be announcing that later today. So we'll be sending out all that information today and over the next couple days.
And then I'll actually jump in here for a second too. So at KeyBank, you can open them online. You absolutely can. But I would recommend going in person just because the online can be a little spotty sometimes. So it's much more efficient to just go ahead and stop in the branch when you can. And we can help you along the way too. So a lot of the times, that's not going to be the only reason to walk into a bank for an HSA. We're able to do really anything all across the spectrum of the financial industry. So we have people there that can help with really every aspect. So I would stop in the branch rather than opening online is my long answer to or short. I don't know what I'm trying to say.
You just want people to come visit you.
Yeah.
You need to make an appointment to come in or?
Not necessarily. I mean, if you guys just stop in on your lunch break, it doesn't take very long to open. If you want to set an appointment, just in case you have additional questions and things that you want to talk about, I would definitely recommend scheduling an appointment. But it's really at your discretion. All right, so how to access your funds. Main ways are HSA debit card. You can withdraw funds from your account via ATM. Just for a second, I wanted to talk about the two different kinds of HSA debit card you can have. Because when you come to open one, we're going to say, do you want limited or do you want unlimited? I am a big proponent of always getting unlimited. Because if you only have the limited card and you go to a CVS or a Walmart, they sell other things that would not be covered for as medical expenses. So it will decline it almost every time. So unless you go strictly to doctor's offices, limited is fine. But if you're going to be picking up prescriptions and or even buying sunscreen and going to use it for that, I would definitely get the unlimited because odds are you're going to be at a place where they sell other things that are not covered under an HSA. So I would definitely go with the unlimited option. You also have online banking. You are able to, and this happens all the time. We'll have clients that come in and they say, hey, I pulled out my checking account card and paid for it, but I meant to pay with my HSA card. Happens all the time. You are able to reimburse yourself from that. Just make sure we keep receipts. Yeah, it's very important to keep receipts and just monitor as much as you can. Just additional information, you cannot pay for an expense incurred before the account was opened. So if you go today and you buy something that would be covered under an HSA, and then you come in next week to open the HSA, we cannot retroactively reimburse you that way. So it has to be once the account is opened. Then you can start reimbursing yourself if you use the wrong cards, because it will happen. Key banks, they look very good. They have keys on them. Yeah. Another important thing here to cover, you can only spend the current available balance in your account. If you go over that amount, let's say you have $20 in the account and you spend 30, if you go in the negative, IRS requires us to close the account every single time. We have no control over that. That's an IRS rule. You can open another one, but then you have to do your whole direct deposit thing and everything all over again. So just make sure we're maintaining the balance so we know how much is in there and when we go to spend, that we don't go over what we have, the current balance. All right, HSA responsibilities. So these are responsibilities of the employee or owner of the HSA account. Determine if you're eligible, which if you have an HSA, we would have been past that part. Decide on the amount to contribute to the account. Make sure it's under the IRS limits, whether you're individual or family on your high deductible plan. Monitor contributions so the maximum is not exceeded, because we will have to close the account, unfortunately. I always suggest retaining receipts. It's not that the IRS is going to come audit you based on an IRS, but if they're already auditing you, they're going to hit you double. So just be prepared for that. They primarily use the honor system when it comes to the HSA, just because the contribution limits are fairly low in comparison to other accounts. So they're not strictly monitoring it, but just always be prepared if we need receipts to have those. And then submit necessary tax reporting. If you TurboTax, it asks you directly, did you make any contributions to an HSA? Did you take any money out of an HSA? And it'll all go in there. If you need documents or anything, KeyBank maintains all the plan documents for the HSA itself. We also have the report for distributions and the report for contributions. Now, it's kind of like a 1099, or if you've received 1099s, it shows the bottom dollar just as one whole amount. It doesn't show every single contribution or every single distribution. So that's why it's important to keep receipts just in case you need that breakdown. I could be wrong, but I believe our 1099 only shows that bottom dollar amount. So if you need to see the breakdown, just keep notes if you can, or you can see it on online banking. It keeps that, or on your for contributions on your what is it? Where you, yeah, what was it? Yes, yeah. So where you're paid, it will show the contributions you've made, typically year to date and per week, how you do it. Correct. This is just really how we can help. So when your employer is enrolled at Key Award program, you can also use our tools and resources to help you do the following. So we help you manage expenses. We give you personalized guidance to help you reach your financial goals, like we talked about in the beginning. Whether that's just with savings or investments. We access tools that allow you to set budgets, plan for retirement, and more. We also have bill pay on our platform. So if you want to set up bill pay, we can do that and help you pay down credit card debts or help with loans or mortgages, or whatever the case may be. So we can really help with anything. Perfect. And our engagement is ongoing. So we're always dedicated to coming in, having conversations and answering any questions that people just might not know. Because what we find on a daily basis is people just don't know what they don't know. So the more we can do these conversations, the more questions that we can answer, it helps.
Oh,
I'm sorry, what's that?
Yeah. Like environment with this one, or will that impact the whole?
Yes, you can do rollovers. I believe you're only allowed to do those once per calendar year. So it's going to be very similar to like the IRS rules on IRS and 401k rollovers. Yeah.
HSA funds to pay the premium on long-term care.
Yeah. Yeah, yeah.
What documents do you need to bring with you to open up an HSA?
To open an HSA, really just get your ID. Yeah, we have everything else. Since TOSO's already partnered with Key Bank, we already have all the plan information. Really, if it allows us to run the accounts, you're good to go. You just have to bring in an ID, and that's really it.
I have a question.
Yeah.
On one of the slides, it said an eligibility requirement for opening an HSA is not being covered by any other health plans.
Mhm.
Does that include supplemental insurance? So an example is, one of the athletic leagues I play in requires us to purchase supplemental insurance. The purpose of it is like if we get hurt during like a sporting event, it covers everything our insurance doesn't pay. Would that make me ineligible?
No, that specifically shouldn't. I would have to check into that. I'm not 100% sure. Again, that's kind of a one-off, but I don't think it would make you ineligible. No.
yeah, it sounds like that might be an accident insurance, which shouldn't
Yeah, so like
impact that.
if you have life insurance policies or if you have accidental death and dismemberment policies and things like that, that won't make you ineligible. Really, the main one that makes you ineligible is Medicare. So once you're on Medicare, you can no longer contribute to an HSA. What's that?
You offer beverage, you know, credit for extended illness, just the insurance plan.
We offer an accident and a critical illness plan.
Okay.
Those wouldn't conflict with the
Yeah, no.
HHP.
No, those would be very comparable to like the accidental death and dismemberment
Yeah.
kind of policies you can buy. Yeah. Okay. Yeah, so that would not conflict. Really, the main thing to think about with that is as long as you're on the high deductible health insurance plan, you're good to go. 9 times out of 10. Yeah.
How do you handle that money? Can you cash it into your, I mean,
Yeah, so what I would do if, I mean, again, it's on the honor system, but how I would do it if I were you is anything that reimburse you, the excess, just take it, just reimburse yourself from the HSA.
is that considered a contribution to the?
No, so that would be a distribution from the HSA. Yeah, so that'd be money coming out. Yeah, because you'd be reimbursing yourself into your checking account or credit card or however you paid for it.
The Key Bank app is also really helpful if you have the HSA.
Yeah.
Because you can see all the stuff very easily.
Okay, you're able to see everything. Those tax reporting documents that I said we keep, there will be on the app as well, so you can just print them off if you need them and give them to your tax accountant or put it in TurboTax if you get it that way.
And if you want to change your contributions throughout the year, just reach out to benefits and we can get that updated for you. So unfortunately, you can't do that through KeyBank, but if you reach out to us, we can adjust that as needed throughout the year. It just typically takes a pay period or two for that to kick in. So just keep that in mind if you have any big expenses coming up that you want to prepare for.
Big expense, 6 months, but I didn't have enough money to cover that. If then in like a year I have money to cover it, how long do you have to like reimburse yourself from expenses?
I always recommend doing the reimbursement within that year. So, I would say the deadline would kind of be when you move the negatives. Yeah. Yeah. Right.
Sounds good. Any other questions? Anyone online have any questions?
No question.
Right, sounds good.
It's not like you have a question.
Yeah.
We got one.
It is like one.
So
I'm good.
I actually was shocked that that wasn't one of like the surprising ones. Good. Yeah, because it's legal in Ohio, but it's not. Yes, it could be one day.
It's federally illegal.
Yeah, once it's federal,
Yeah.
maybe it'll.
Yeah. Sounds good.
After.
Well, and also it said it's not calling for illegally obtained. You're probably gonna go through this.
Yeah.